All right, let's jump right in. Today, we're digging into a really fascinating analysis that makes a bold claim about some of India's most overlooked public sector companies. You know, the big government-owned ones. The argument? These sleeping giants might just be about to wake up in a big way.
So here's the central question we're tackling. Could these companies, the ones that often get labeled as boring, actually be tomorrow's biggest winners? Well, this analysis we're breaking down argues that the answer is a pretty resounding yes.
So, let's get into the heart of it. The whole idea here is that this specific group of companies is full of what the analysis calls sleeping giants. I mean, they're already profitable, they're growing, but for some reason, the market has them deeply, deeply undervalued. We're going to explore exactly why they might be on the verge of waking up.
And here are the stars of the show. These are the 5 companies at the center of this whole strategy. You've got 2 huge banks, Bank of Baroda and Canara Bank, and then, on the energy and infrastructure side, you have Coal India, Power Finance Corporation, or PFC, and REC Limited. Don't worry, we're going to get to know each of them a little better in just a bit. But first things first, to really get why these companies could be set for a breakout, we have to zoom out and look at the big picture. This entire analysis is framed within a specific economic environment that it calls India's Goldilocks economy. So what on earth is a Goldilocks economy? Well, just like the story, it's not too hot, not too cold, it's just right. The economy is growing strong, but not so fast that it's causing crazy inflation. This is basically the perfect, stable environment for the kinds of companies in this portfolio to just thrive.
And check this out. This perfect environment is being driven by 3 huge forces. First, the central bank is cutting interest rates, which makes money cheaper and encourages investment. Second, the government is pouring money into a massive infrastructure build-out. And third, the banking system is finally healthy again after years of problems. You put those 3 together, and you've got a perfect storm of positive conditions.
Okay, now we're getting to the real secret sauce of this analysis. The whole argument hinges on the idea that the market is completely missing 3 specific, really powerful triggers that could unlock a ton of value in these companies.
And here they are. 1. Holding company re-rating. 2. Green financing re-rating. And 3. ROA sustenance. Now, I know, they sound super technical, but stick with me. The ideas behind them are actually pretty simple and they are absolutely crucial. Let's break down that first one. So trigger number 1 is all about Coal India. Right now, the market kind of sees it as this one giant, slow-moving company. But the thing is, it's made up of a bunch of smaller, valuable companies. The theory is, when Coal India starts selling off shares of these subsidiaries, investors are going to be forced to look at the value of each individual part and realize the whole thing is worth way more than they thought. Trigger number 2 focuses on REC and PFC. Historically, everyone's seen them as lenders for, old-school coal and power plants. But here's the twist. They are pivoting hard into green energy. The analysis bets that once renewables make up a huge chunk of their business, the market's going to wake up and start valuing them not as boring old lenders, but as exciting, high-growth, green infrastructure banks.
And the final trigger, this one's all about the banks. Look, for a long time, public banks just weren't that profitable. But now, Bank of Baroda and Canara Bank are consistently getting a great return on their assets. Basically, more bang for their buck. The key here is proving to the market that this isn't just a lucky streak. This is the new normal, and that fundamental shift hasn't been priced into the stocks yet.
Okay, so now that we have those 3 triggers in our heads, let's circle back and take a closer look at the 5 companies themselves and see how this all connects.
And whoa, check this out. The portfolio is incredibly concentrated. A massive 80% is in banking and finance. The analysis calls this a double-edged sword. Why? Well, it's fantastic when interest rates are falling, like in this scenario, but it also means that if rates were to suddenly spike, it would hit almost the entire portfolio. It's a very focused, high-conviction bet.
So first up, let's meet the banking twins. Bank of Baroda gets the nickname the International Sovereign because it has this huge global presence and a really modern digital business. Canara Bank, on the other hand, is called the deep value play. It's seen as being on sale, basically, even though its profits have just exploded.
Next up, the energy and infrastructure players. Coal India is the cash cow with a catalyst. See how this connects? The catalyst is those subsidiary IPOs we just talked about. That's our trigger number 1. And REC and PFC are the green giants, which, you guessed it, ties right back to trigger number 2, the green financing re-rating. They're the money behind India's huge green shift.
All right, let's get to the really juicy stuff. Now we're going to look at the numbers, the hard forecasts and bold predictions this analysis makes for these 5 companies.
This table tells a huge part of the story. Just look at the PE ratios. Think of that as the price tag. They are all incredibly low, which suggests these stocks are a bargain. Now compare that to the return on equity, or ROE, which tells you how profitable they are. Those numbers are super high. So, getting high profitability for a low price? That is the classic recipe for a potentially fantastic investment.
And that profitability isn't just a number on a spreadsheet. Let's take Coal India again. It's projected to pay out a dividend yield of over 6%. That means it's not just about the stock price going up, it's a serious income generator too.
And speaking of the stock price going up, the growth potential here is massive. Get this, the consensus forecast for REC Limited alone points to a potential upside of over 35% in just 1 year, all thanks to that huge pivot into green energy.
So when you put it all together, what's the bottom line? The analysis projects that this entire portfolio could grow between 18 and 22% every single year. At that kind of rate, your initial investment would practically double by 2029. That's a huge, huge claim.
But of course, it can't all be sunshine and roses, right? No investment thesis is complete without looking at what could go wrong. So, to be fair and balanced, the analysis is very clear about the potential roadblocks. And it flags 3 big ones to keep an eye on. First, since the government owns these companies, there's always the risk it could step in and make them do things that aren't purely business-driven. Second, what if inflation rears its ugly head and those helpful rate cuts suddenly turn into rate hikes? And third, a global recession could totally tank commodity prices, which would hit a company like Coal India right where it hurts.
But to bring it all home, this quote from the source material just perfectly captures the whole thesis. These companies are sleeping giants. They're already doing well. They're profitable, they're growing, but the market just hasn't woken up to their true potential. And this analysis is betting that the awakening is just around the corner.
And that leaves us with one final big question to think about. In a world where everyone is chasing the next flashy tech stock, could it be that the single biggest opportunity is hiding in plain sight, right here in the so-called old economy? It's definitely something to chew on. What do you think?